The information featured in this...
Hello and welcome to Your Money, Your Call. I'm Julia Lee from Bell Direct. And joining me tonight have Nick Radge from the Chartist. We saw some big buying in the banks today. In fact, the most we've seen in terms of bank volumes in the last 2.5 weeks since we've seen the pullback in the banks. So does that mean the big four banks are back on their way up? Nick, I mean, looking at the banks, they've had a phenomenal ride up. I mean, we've seen CBA, ANZ as well as Westpac up 70% over the past 2 years. A lot of investors, you know, pretty happy with that performance. What do the charts say?
Well, the trend is up. We've been riding these since early 2012. As far as we're concerned, the trend remains up. As Tim said, they've probably come a little bit too hard, too fast, and certainly some scope for a bit of a pause here, and that would be a healthy pause. But there's no reason at this stage to suggest that trend is in any threat, and as a result, we'll keep holding. And I think Tim's quite right. I think hold is the way to go here. Expect some consolidation, and I think after a nice period, a month or two of consolidation, look for them to continue higher again.
Okay, so it looks like with the banks, we've seen that trend being up. A lot of people a little bit cautious given the valuations, but still a fully franked dividend of about 6 to 7% at the moment. I think that's what catches a lot of investors and gets them interested in the banks. Let's start off with Flexi Group. FXL is the stock code, and we'll try and get the stock price chart. A bit of volatility in terms of Flexi Group share price, but I guess if we have a look at what its business is, it's almost like a mini finance group. It does look at financing for different products, and it's involved in both Australia as well as New Zealand. And Nick, looking at the share price chart, I mean, the stock is up 20% over the past 12 months, but I guess what stands out is that over the last 1 month, we've really seen the share price coming under a bit of pressure, down by about 8%. What's going on in terms of share price?
Yeah, well, if we extend the charts back to 2012, we've had a pretty significant run. There's been a very significant trend, and we're now seeing some sideways consolidation. It's been quite a volatile 4 or 6 months, and I think we're trading in a range between about $4 and $4.70. We just popped out of the top of that range and come straight back in again. And I think if we can come down to the bottom end of that range, which is closer to $4, I think that's going to line up the fundamentals that Tim mentioned earlier on. That's probably going to be a good buying opportunity. So it's just having a rest after a very, very big run, and that's a healthy sign as far as we're concerned. I would be concerned if we have a high volume drop below $4, but it doesn't look like that's going to happen.
Good evening, panel. I'm ringing about DAmato International, ticker code DNA.
A lot of those gaming companies are trying to target the Asian high rollers, and certainly DAmato is a company that is doing the same. I think about 80% of its revenue comes from high rollers. Certainly the share price has gone absolutely nuts, up 158% over the last 12 months. So let's go to a technical view first. Nick, what are your thoughts on DNA?
Yeah, well, it's certainly gone very parabolic, as you can see on the chart there recently. If we can zoom out and have a look at the bigger picture back to 2008, we've actually been stuck in a very, very big, long basing pattern. So we're starting to break out of that, approaching the upper end of that band, which sits at around the 125, and I would say that's probably pretty close to where those analysts got their target from there. So I wouldn't be surprised to see it kind of test up there. Historically, it's been very, very illiquid, very difficult to actually assess. And it's only just recently, obviously because of that analyst upgrade, that volume has come into that. So be careful. It's going to be a very volatile ride. In the bumps that we've had over the last few years, they have reversed very, very quickly. But obviously, you know, if fundamentally this stock is going to keep going, then just be prepared for a little bit more volatility and hold on to it.
Brian, welcome. What's your question tonight?
Good evening, Julia. Good evening, panel.
Hi.
I would like your comment about Grange Resources, please.
Oh,
it's apparently trending up since October.
Absolutely. I mean, iron ore stocks have done very well since iron ore prices bottomed in around about July this year. In fact, in the month of November, the top 3 stocks in the ASX 200, all iron ore stocks. We've got Mount Gibson, Atlas Irons in there as well as REM. And we've just got a stock price chart there. You can see that prices for Grange Resources seem to bottom in the second quarter, just under that 15-cent mark. Since then, we've seen the stock price more closer to that 25-cent mark. Nice looking chart. Looking at the share price chart, Nick, what are your thoughts on this?
Sure. We've been bullish for iron ore for quite some time now. We've been long MGX. In fact, it's one of the best performing positions in my own personal portfolio. Been long MGX for quite some time. And just recently, I personally added Grange Resources. So it's obviously a $10 stock. We recently added in there, it's hitting resistance here at 25 cents, and obviously we'd like to see that move up and through that on some increased volume. If it can, next stop will be 40 cents. Historically, Grange Resources has a good ability to trend both up and down. So when things do turn around, you don't want to be hanging around for too long. But at the moment, as far as our models are concerned, the trend is up, momentum is up. We're banging on resistance here at 25. I'd like to see that overcome, and then next stop 40 cents.
Okay, so for those viewers at home who are interested in Grange Resources, if we do see a turnaround in the share price, what are some ways that they might be able to look at managing the position? I mean, what do you look for? Do you look for technical signals? Do you put some stop losses out there?
Yeah, we look for breakouts. So we want to buy as prices are rising, not as they're falling. So pretty well the complete opposite to Tim, and we'll take the other side of his trades all the time. That's just the way it works. So if you don't have a position in Grange, as an example, 25, a breakthrough 25 being resistance would confirm the trend is moving higher. You always want to confirm that it's doing what you want it to do. So buying on a break of 25, and then we want to manage the risk. So that's the best thing we're all about, just being good risk managers. And as prices move up, you just place a trailing stop behind it, whether it be 10 or 15% or 20%, depends on how much room you want to give it to move. Generally speaking, we'll give a stock a fair amount of room to move while the broader market trend is up. But when the broad market trend turns down, we'll tighten it up and close the door a little bit.
Okay, let's go to our next caller. That was Grange Resources. So from Grange Resources to James from Sydney. James, welcome to the show. What's your question tonight?
Yeah, hi Julia.
Hi.
My inquiry is about Bougainville Copper VLC. I understand the copper mine is going to restart, and given the vast amount of capital needed to restart the mine, should I invest in BOC?
Okay, so having a look at Bougainville Copper, I think this one's actually 53% owned by Rio Tinto. There hasn't been a lot of activity here, and you can see from the share price there's been quite a lot of volatility in terms of this stock as well. So Bougainville Copper, there is a copper and I think also a gold and silver mine at Bougainville in Papua New Guinea, which is the key asset there. So we might start off with you, Nick, this time. What are your thoughts on this one?
Interesting one, James. I mean, first of all, an incredibly illiquid stock makes it very, very difficult from a technical standpoint to give us any ideas. Now, you've mentioned something that potentially you're hoping will trigger a rise in the share price. So my question is, why is the share price going down? And I'm not saying that to be condescending, but I mean, at the end of the day, there's people that know what's going on before the public gets to know what's going on, and that's reflected in the share price. Remember, share prices will forward price any events in the future. So we have an event coming up potentially, but that's not being reflected, at least not positively, in the share price. So you can see we've dropped from around the 65-cent level down to around 44 cents. We're at almost all-time lows. To me, that's not a positive sign in any way, shape or form. I would be more inclined to stand aside until we start getting more positive price action at least, and that's just not there at the moment, I'm afraid.
Thanks for taking my call, Julia. I was just wondering the panel's thoughts on a recent listing. It's ANI, Australian Industrial REIT, and it's offering about 8% yield, and just wondering your thoughts. And also another one, if you wouldn't mind, cash converters. Nick probably wouldn't like it because it's had a bit of a fall from grace, but wondering Tim's thoughts fundamentally.
Sure, let's start off with Australian Industrial REIT. ANI is the stock code. It's just recently listed. It did have a nice debut on the market. It listed, the IPO price was $2. I think it hit as high as $2.13, but since then it's come back to $2.05. Now, we did see a spike, Nick, on the open, and then it's just wandered back down. It's quite hard to evaluate something that's only been trading for around about a month.
Yeah, it's too hard. There's not enough data. There's hardly any volume there whatsoever now. I think it traded 264,000 shares today, so there's not enough data for us to...
In which case, let's jump to CCV, cash converters. Probably one that you won't like here, Nick, because we've seen the share price tumble. We'll try and bring the share price chart up as well, and it has been a very difficult couple of months for CCV shareholders. What are your thoughts on this?
Yeah, trend is certainly down. We're testing those June lows where a lot of buyers did come in down that way. That was down towards the 80-cent mark. We did take a little bit of a go at this in early 2013, but hopped out quickly at 125, and we've been sitting on the sidelines ever since. As far as we're concerned, trend is down. We'll stay that way until it changes, and we won't be touching it. So probably look for it to test down towards that 80-cent level. We're not far from there now. And see if those buyers that were there in June come back again.
Oh, hi, Julia. Mine's regarding Oz Forex. It reported well recently.
Nick, once again, you know, not a huge track record here, but higher highs and higher lows so far. What do you think?
Yeah, well, the trend is certainly up, but, you know, quite rightly, there's not enough data there at the moment. Volume today was a down day. Volume was very, very low, which is always a positive sign. Yesterday, big up day. Volume was very strong. It looks like yesterday was possibly the report day. I'm not sure, but that's what you want to see. Any pullbacks, you want to see it on low volume, Luke. Keep an eye on that. If volume accelerates to the downside, then you'll have a problem. But at the moment, on any down days, volume is low. That's okay.
Okay, so far so good. We'll just have to keep an eye on Oz Forex. OXF is the stock code there. Let's go to our next caller. We've got Luke on the line from Brisbane. Luke, welcome. What's your question tonight? Hi, Luke.
Just looking at CSL, it's been sitting under the $70 for some time, and just wondering whether it will break through that.
Okay, good question. A darling of the market has done extremely well. The healthcare space certainly has been an area that's performed well over the last year. I think the healthcare sector is up around about 32%. Looking at CSL from a technical viewpoint, though, Nick, what are you seeing?
Yeah, great trend. We've had this in our conservative portfolio since about March 2012. Trend is up. Everything looks positive. And like I've said earlier on in the show, it's been a strong trend, and we're seeing some nice sideways consolidation here, and that's a healthy sign. Banging on all-time highs, consolidating, very, very positive. There's no reason to be concerned. Just got to be a little bit patient. Potentially, if it breaks out to those new highs, you might want to add to your position. Looks okay to me. Okay, so if it breaks past the $68 level convincingly? Yeah, 68, 69, somewhere in there. $69 convincingly, right. You'll be adding to positions there. And James writes, hi Julia and panel, currently holding Bendigo Bank, which has lagged the Big Four and Bank of Queensland in recent times. What are the panel's views on future capital growth for Bendigo? It's a good question. We always focus on the Big Four banks, but how about the regionals? I mean, Bank of Queensland lately has rallied quite strongly, and now we're seeing a bit of a pullback for Bank of Queensland. Well, what about Bendigo and Adelaide? Let's have a look at the technicals first. What do you think? Yeah, interesting chart here at the moment. We've just moved up to some significant highs. This is the third time we've tested this level, as you can see there on the chart. And today, when we did that, we actually closed quite weak. We closed down at 11.32, and we did so on an increased volume. Now, when you get the combination of a weak close on high volume coupled with a test of significant resistance, it means sellers are there. That's the only way it can close lower. So potentially what you're seeing here at the moment is a little bit of profit taking going on. And until that supply has been overcome, then the stock is probably going to struggle to move too much higher. The trend is still up, no doubt about it. It just looks like it's going to be stuck here for a little bit longer until that selling dries up. I sold out of ASX about a month ago, and having second thoughts whether I should actually get back into ASX or should I maybe get into Computershare or Macquarie. How about you, Nick? Yeah, definitely Macquarie Bank. I'm right up there. We've had Macquarie in our momentum models from September last year, down around the $29 mark. Trend is firmly up. Very nice trend indeed. Not getting parabolic, not being silly, just moving along nice and slowly, and that's what we like to see. So stay with that kind of position. I completely agree with Tim on ASX and on CPU as well, and I think it's reflected in the share price, especially with ASX. That's basically done nothing for, well, since the GFC. It's rotated in a range. We're at the top end of the range at the moment, but it certainly hasn't been able to get onto the job at all. So Macquarie definitely out of the three. The first part of the question I think also was directed at Nick about some comments on Switzer. Sure. Well, the comment I made, and we're looking at very, very big picture chart patterns here. That's what we're looking at. And there's a definitive pattern that we saw after the 87 crash that is now being replicated after the GFC. So you've got a massive shakeout in the market, and then you've got this very broad, prolonged period of sideways trading, and that's what we're seeing at the moment. What causes that? Obviously, the economy slowing down. I completely agree that interest rates now and then are totally different, but at the end of the day, price action is exactly the same. So it's just a bigger scenario of that. Obviously this time around, potentially with lower interest rates staying down, that we might come out of it a lot harder and faster than what we did back then. But as far as the small ordinaries are concerned, we're stuck in a range. We haven't moved since we're at the same level what we were back in August 2009, and I think there's a message there, and that's exactly what we saw after the 87 crash as well.
Now go to an email that's just come in. It says, "Hey panel, just wanting an outlook on Main Pharma MYX. It's nearing its 12-month high, and I'd like to know if you have a positive outlook on this stock and what would you view as 12-month target." Interesting company. Just today, I think, it had its annual general meeting, and at its AGM, the company coming out to say that its revenue for the first 4 months of the financial year was $45 million. That's actually a 230% increase from the same time last year, and that puts it on track for a full-year revenue target, or perhaps number of $135 million. They've got about 12 products they're selling now. They've got a right to sell 12 products. That's up from 8 in the last financial year. So having a look at Main Pharma, it did recently reach an all-time record high and then pull back. What do you think, Nick?
Yeah, interesting, and certainly a nice long-term trend there. Very, very nice. The move today was very, very strong. Closed up 8.8%, was higher during the day's session, testing those all-time highs. And just like I said a moment ago, when you see a stock close off its highs of the session, this one hasn't closed too weakly, admittedly, and but when it does close off the highs, does so on increased volume, when there is significant resistance there, it does mean sellers have come in. So potentially what you've got here is a big drop in the stock. I think it's dropped from about the 85, 84 cent all the way back down to 65 cents in a couple of days. Now that's probably shaken a few people. So today's rise, those people have gone, you know what, I'm going to take this opportunity and I'm going to hop out this time around. So I think that's what we're going to see here. I would not be surprised to see this stock move sideways for a period of time, and admittedly in a bigger trend, in the bigger scheme of things, that's a healthy sign. So just be expecting a pause, let this momentum gather itself again, and then if it can step up and move on out to new highs, you'd want to go with it.
We have Tim on the line from Melbourne.
iCar Asia, similar to car sales in Australia, so I'm just wondering if Tim and Nick have got a view on that internet Asian-facing company.
Sure. So having a look at iCar, the stock code is ICQ, similar to car sales but dealing in Asia. So I think it's in Malaysia, Singapore as well as Indonesia. The stock price though has been doing extremely well, up 340% over the last 12 months. So let's go to Nick first for a technical view. What do you think, Nick?
Yeah, Tim, it looks pretty good. There's nothing to be concerned here at the moment. As Julia said, it's come a long way very, very quickly. So we do like to see it have a little bit of a pause, and that's what's going on at the moment. The rule of thumb with the pause, as I've always said, so long as it's on low volume, don't be too concerned about it. We only want to be concerned if it's on high volume. So at the moment, we just pull back a little bit. I'd only get concerned technically or price-wise if we broke down through 75 cents. That's a fair way away at the moment. So look for some consolidation here. It's been a good trend. You've seen before that earlier on in the year, between April and June, we did the same kind of thing. We moved sideways, had a nice pause, did so on low volume, and then moved on again. And that's the way the market moves. Steps up, consolidates, steps up again. And that's what we're going through at the moment, just some consolidation. I'm not overly concerned at the moment.
Michael on the line from Sydney. Michael, welcome to the show. What's your question tonight?
Hi, thanks for taking my call.
You're welcome.
The question is about Amcor, the possible demerger, with Amcor concentrating on the rigid plastics and the flexible packaging, and the spin-off, I think, Aurora concentrating on the fibre packaging and the North American distribution. I was just wondering if that demerger goes ahead, and I think if it does, there'll be some volatility. Would there be, say, an opportunity to buy into those companies at quite a low price?
Okay, and Nick, I mean, with the demerger, it's hard to look at it from a technical point of view, but I guess most of it's priced in. What are your thoughts?
Sure. Well, the trend's up. We've been holding this again in our conservative portfolios from about April last year. We just ticked up to new recent highs in the last week or so and consolidating there. It all looks good. I would be concerned if it pulls back to around that 10.25 level. So trend is up. Looks for some more consolidation, but we like it. We're holding it.
And on that note, that's all we have time for today. Thanks so much. So Nick Radge from the Chartist.